Markets aren't too hot right now, but I'm not going to give up on you guys. I'm also not going to give up on myself. We have to, again, markets could, in some ways, like I know people don't want to pay attention to markets during periods like this, and that's completely normal. That happens, but the goal is to build a resilience to just kind of like maintain like a steady a steady state of like analysis on the market so that your education's improving regardless of market direction. Previously in the past, I know myself and then other folks as well, like again, market periods like this, it just makes you feel like, oh, I'm not gonna do anything, right? It's not sexy, but it is what it is. So I will dissect regardless of the market environment. I think that's a healthy practice, and it seems like this LinkedIn stuff is never working anymore. So no more LinkedIn Live, I guess. I like to do the marketing on LinkedIn because a lot of professionals are on LinkedIn, but it seems like it's just not working. Two weeks in a row now. Okay, that's fine. We will get started anyways. So good morning, folks. Hopefully that little bit of a introduction talk kind of helps some of the folks in here who are newer to the high volatility modality of the marketplace. It's not the greatest environment, but sometimes like I understand like people need hand holding. So environments like this is where I extend out the hand and say, hey, look, it's going to be okay, right? Don't worry. This is all part of the markets, right? If you haven't been here long enough, you haven't seen a volatility event. But yeah, we're basically rising in volatility right now, and so things are not favorable in conditions. Remember, what I have right here, right, is the zones that I'm looking for, and essentially the VIX does a pretty darn good job of just capturing the modality of the marketplace. I expect that, right now, I mean, okay, this yellow block right here could be a little deceiving as well because you could be shorting in this environment also, right? So it seems like if I were to fine tune this, I would put like, two colors on the yellow or orange. Well, I was gonna say, yeah, it's yellow. I would put two shades of like color on the yellow part right here, where the first part is like maybe below 20 is like yellow, and then above 20 to 30 that's like orange, and then red is when we're above 30. So as you can see right now, right, if you notice in the last 14 days, again, 14 days ago, I had the view based off of the snapshot of the global markets that we were going to break out into all-time highs. That was the case momentarily. But we had a failed breakout, and again, it helps to capture this narrative. I put a narrative on it. We failed to break out. The markets as a whole failed to break out, and then look at where we are now. So the next time we see a major market failure to break out, we know what typically precedes that. What precedes a market failure to break out is volatility that we're seeing right now. So 14 days later, we have such a decline in the marketplace. I look across the board, there isn't that many plays, right? 2 weeks ago, the plays were just like stacking up every week. Every week there was just like tons of plays. But now things are drying up, and I would probably say it's more lucrative on the short side. But I know that direction isn't a uh, it's not an MO for many investors out there because investors are like, wait, hold on, I never thought about short selling. Okay, how do I go about that? So yeah. Edward says if VIX, it seems VIX greater than or equal to 30, we should anticipate a potential bullish reversal. That seems to be the case. Is what I'm thinking. That's why I was thinking like I should try to fine tune this a little bit more, right? Because like we are kind of like essentially this is like a breakout right here almost, right? Just about breaking out. So we might be on a new tier of volatility. If you're curious about the macro narrative as to why we're seeing this volatility, I mean the Trump tariffs, right? Okay, so hold on. When Trump got into office, right, it was like super bullish because the whole AI infrastructure spending in it, and you could see it across the board with like AI stocks, software stocks, everything was just pushing up. That was like before 2 weeks ago. Then he started with the trade wars and stuff like that, which is kind of like we should have seen it coming. I would say like that's something to anticipate. I thought it would impact China a lot more, but then in this cycle compared to I think the last time was like what 2022 or 2021. I forget the years, but the last cycle it was a little bit different. It was like more like China impacted. Now it's like China seems to be performing. So okay, so what's happening at the macro level? If you want to dissect the price action, besides like hey like just looking at price action yeah, we're looking at price action, but then like, what is the actual macro narrative, right? So there's a lot of things going on right now. From my analysis of the macro narrative, essentially, the two things that are super major for, stocks to perform is like one is like government spending, because government debt. If you, I don't know if you guys have saw this, but recently, maybe in like the last 3 months here, I saw a video of Elon Musk, and he was presenting on macro. I was like, huh, this is actually new. This is refreshing. So Elon Musk was actually talking about macroeconomics, and he said basically the TLDR is that we came to conclusion that government spending is inflation, right? Or something like that. So basically, in other words, like the government's, as our government debt, okay, government spending right now with the deficits is basically government debt. So government debt is government spending, and government debt is what causes the stock market to appreciate. And I was just like, dude, this guy got it. Like some analyst, like he paid, I don't know, some multi-million dollar paid analyst actually educated this guy on understanding what's going on. So we knew that, the more the governments spent money, which is basically getting into more debt, meant that the stock market would be going up. That's essentially what's happening. And then the whole Doge thing comes in, and then now you have like, more tight control of like government spending. So the spending is like being controlled, so therefore it puts pressure on the stock market. And then at the same time, we have the introduction of trade wars yet again, right, with our nearshore folks like Canada and Mexico, etc. So that's, the volatility added in terms of like the quickly changing narrative in the last 14 days. And basically, we saw the S&P 500 sell off pretty hard. So let's look at the S&P 500, right? I'm trying to give you guys, again, the beauty here, as I've learned, is that every week, like, let's say 10 years or even 1 year from now, we will forget about this moment. I'll tell you that. Because, I mean, we'll forget about this moment that you're seeing right now, right? And then as a trader, all I'm really looking for is just like a really good environment to go long, right? So hold on. There you go. I got, for the folks listening for free, I encourage you to join. So, as I was saying, what was I saying? So yeah, like a year from now, we will just forget about all this, right? And so as a trader, like if you really position as a trader or hyper focus on being a trader, it's about just optimizing the direction, right? And right now the direction has been down. So yes, downside trades are really good. As you can see, the rest of the markets are here. You can scan through the 10,000 stocks that are in the public markets. There's really nothing to trade. Like there's only like, I don't know, I can only find like, in terms of like 2 billion and up, I can only find like seven, right? Like seven stocks that maybe I want to trade on the long side, but on the short side, the list is pretty big. So I don't know if you folks have a bias towards the short side, but we could cover some of that today. Some comments here. Evan says Canada is going to get riggedy wrecked. uh, oh, yeah, I forget. Evan's over in Canada over there, so he's got an interesting perspective that would love to hear as well. V says maybe it's more about just reading the VIX trend. If it is trending up, then anticipate bearishness. It looks like the VIX is at a key resistance level. It's not necessarily just the trend, because this thing doesn't trend, right? I mean, I guess you could say, I don't know. I mean, we could